2% YOY. Capital adequacy, CAR remains one of the best in the industry at 18.02 with CET1 ratio at 14.98%, comfortably above the regulatory minimum, providing ample headroom for growth. Our sustained efforts in strengthening underwriting standards through centralization, verticalization, and the digitization has yielded consistent improvement in our asset quality. Gross NPA reduced by 116 bips YOY to 3.60%, outperforming our guidance of 4%. Net NPA declined by 40 bips YOY to 0.63%. Provision coverage ratio is at 94.61%, reflecting a well-provisioned balance sheet. Let's talk about the credit costs and slippages. Credit costs stood at 69 bips for Q4 FY25, 66 it was in Q4 FY24. Slippage ratio was contained at 1.13% in Q4 FY25 compared to 1.56 in Q4 FY24. Gross slippages for FY25 stood at 12,073 crore, net slippages around 10,478 crores, and if you remove one of the biggest slippages that happened, my slippage is only about 8,700 crores and much below the guidance that I had given to the market. Now, if you look at recoveries, gross recoveries are at 14,995 crore, closely aligned with our full-term guidance of 16,000 crores. During FY25, gross recovery has surpassed the gross slippage by almost 3,000 crores. With regard to margins, NIM was at 2.91 crore for FY25, within our guided range of 2.8 to 3%. That's what we had given the guidance. And NII, net interest income, registered a YOY growth of 1.76%, while a robust 23% growth in non-interest income helped offset the moderate NII growth. And we all know the reason why the NII has also dipped a little. If you look at the business growth and the strategic priorities of the bank, as far as the business growth is concerned, credit growth of the banking industry moderated from over 20% in FY24 to 11% in FY25. Similarly, deposit growth decelerated from 13.5% in FY24 to 10.3% in FY25. In our Q3 post-result interaction, we had guided towards a lower end of the business growth. This was a conscious strategy. We curtailed high-cost deposits mobilization. We limited to 5% YOY growth in FY25 versus what we had done in the last year. We had done a little bit of more fundraising through the bulk deposit, but we moderated it to only 5% during the current year. We also selectively deprioritized low-yielding credit assets. As a result, total deposits grew by 7.2% YOY, and the guidance of, as against the guidance of